The JSE is firmer today with its global peers mixed as investors continue to digest the prospect of slowing economic growth and the tightening of monetary policies to restrain a surge in inflation. For a look at the latest market developments now, we're joined by Michael Treherne, Portfolio Manager at Vestact. Thank you very much, Michael, for your time this afternoon. So the Rand dropping the most in 3 weeks yesterday, ending a 4-day winning streak, but has strengthened at midday trade. Talk us through what is suddenly driving this gain.
Afternoon, Dudu. Yes, as you said yesterday, the Rand was slightly weaker. That seems to be driven by weaker than expected Chinese GDP data coming out yesterday. Global markets seem to have shrugged that off today, with Asian markets all in the green. And as you mentioned, the JSE, all shares apparently also doing well this morning. And as a result, emerging market currencies have done well. Apparently the Rand at 14.58 and having a good day so far.
Right, so copper prices also soaring to the highest level ever recorded. What are some of the driving factors behind those gains?
It seems to be large macro things in terms of probably one of the most significant is supply issues. And then in China, they've got electricity problems at the moment where a lot of the copper smelters aren't able to operate. And it means that there's now a global shortage or a pending global shortage of copper. And it's resulted in people stockpiling copper on their side to ensure that they've got consistent supply, and that's driven up prices.
Stats SA is due to release inflation data tomorrow. CPI expected to come in slightly above last month's reading. What can we expect there?
So last month we had 4.9%. The expectation tomorrow is 5%. It's worth noting that that's still well in the range of 3 to 6% that SARB says. I think going forward, though, CPI will be under pressure. As we saw yesterday, we've got a steep fuel increase on the way, and fuel is one of the biggest drivers of our inflation numbers. So let's see what the exact drivers are, but inflation does seem to be on the up, and that means if you've got a home loan, more than likely in the next 6 to 12 months, you're going to be paying more on it because interest rates are going to go up alongside increased inflation.
Company news and results now. Combined Motor Holdings, which operates vehicle dealerships and owns First Car Rental, has released its results for the 6 months ending 31 August 2021. Talk us through the numbers.
Yes, so CMH had an absolutely terrible year last year, as to be expected. New car sales were non-existent because everyone was locked at home, and the car rental business also doesn't do well when there's no tourism. They've shown very, very strong 2021 so far. Compared to pre-COVID numbers, it's sort of in line with previously, but what matters is the profit number is up significantly. They attribute that lower interest rate. They also point out that they're having a problem getting supply of new cars. That's resulted in higher second-hand car sales. So new cars struggling a bit with second-hand car sales well. They expect those supply chain issues to resolve themselves over the next 12 months.
Michael, thank you very much for that update, and we do apologize to our viewers for that little bit of a shaky connection towards the end. Michael Treherne, Portfolio Manager at Vestact.